Hello and welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks with in-depth analysis. We deep dive into financials and also tell you about the key risks and triggers going forward. Well, let's get straight to the first stock today. My colleague Sonal traveled to Nashik to get us this very special deep dive on ABB India.
Inside Out is in ABB India's green factory at Nashik, and here we are to understand everything about ABB India's business, the strategies and a lot more. But first up about the company. It is a play on the capex cycle in the country, and it is a company which provides global technology solutions for products and services as well. It is a 75% owned subsidiary of ABB Limited, which is a Swedish-Swiss multinational. The company has 4 segments. The first one is electrification, there's motion, process automation, robotics and discrete automation. What are they really? We'll understand more in a bit, but let's talk about the financials first. Calendar year 2023 was really strong for them. They surpassed their guidance of 10,000 crore rupees in terms of revenues to come in at 10,446 crore rupees. This number has been increasing. In fact, in terms of margins, they have grown from levels of 8.5% in 2021 to levels of around 14% in 2023. Profits have also increased manifold from 2021 levels of 532 crore rupees. Now it is sitting on profits of around 1,250 crore rupees. The balance sheet is healthy as well, with cash on books of around 4,700 crore rupees. But what are the plans with the cash on the books? What are the strategies of the management? And how do they see growth from here on? And what are the internals really looking like? We'll know that and a lot more. But let's go and speak to the management of the company. Okay, as promised, it's time to take a deep dive into the business of ABB India. I have with me the Managing Director of the company, Mr. Sanjeev Sharma, in the factory with me. Thank you so much for joining us today and speaking to CNBC-TV18. And you know, while we talk about the theme being capex heavy and everything capex right now, before we talk about that theme, I want to understand and for you to simplify the business of ABB India. There's so many things. What is the ABB way?
First of all, Sonal, welcome to ABB in Nashik plant. Thanks for coming here. ABB as a company, we are organized in 4 verticals, and each vertical has a deep impact in India of today in terms of when we are constructing different infrastructures, developing the industry, developing the automation for the higher productivity. So ABB play a big role in the electrification and the automation of our customers. Now, in these 4 verticals, we have electrification is one theme. Second theme is motion. Third is process automation. And fourth is robotics and automation. Electrification is all about providing power to infrastructure projects, cities, then buildings, and all the other associated electrification and automation that goes in it to get the most energy efficient solution. Motion is all about energy efficiency, wherein we have motors and drives. In any industry, motors consume a lot of energy. So if you replace them with high energy efficiency motors and also couple them with thyristor drives, the customers gain a lot of energy efficiency, and their overall energy bill comes down. Plus, more energy efficient equipment you have, the customers have a lower greenhouse gas emission credentials. So that's the second part. The third is process industries, wherein you look into the core sector like oil and gas, offshore oil and gas, onshore oil and gas. Then you have the petrochemical plants, refineries, cement plants, aluminum industry, steel plants, pulp and paper, all those industries which cater to the market, larger market. We supply the process automation, which leads to better productivity and better resource optimization. Last but not the least, robotics automation, especially in India now when the manufacturing is expanding, be it in the automotive industry, electronics manufacturing, and also many other subset industries which are developing and which is looking for high quality, repetitive quality, and flexibility, how they want to organize their production. Robotics automation goes there and also is available 24/7 for them to make production, which is a flexible production. So that's our portfolio.
Okay, that's a huge portfolio. But you know, I've been reading about the company and you're not satisfied with that, it seems. You want to cater to more products, more sectors. So tell me, things have changed a lot in last couple of years. We're talking about the CapEx theme. Which are some of the sectors where you will see maybe the biggest growth, or which would be the sunrise sectors for the company?
So our portfolio helps the government spending as well as the private spending in that area. So as far as we are concerned, earlier, many years ago, there were only few market segments which were active and relevant in the country. But now, I would say about 7-8 years, about 8 market segments were relevant for us. Today, they have expanded to 23 market segments. So that means the market has become much more broad-based. And earlier, we used to do business mostly in the metro cities. But now, Tier 2 and Tier 3 cities, we have substantial business being done there. And there are different market segments which have a different growth rate. So there are new market segments which are growing at a 20% rate, like renewables, data center, you have electronics manufacturing. So these are the segments which are new, relatively new, and adding to our growth story. Then we have the medium-size, kind of growth segments, which are, I would say, growing 10 to 15%. That again makes a chunk. And the traditional market segment, which still are very attractive for us, they are sub 10%. But some of those market segments are now joining the growth story, and we see much more volume uptake. And since we are in this country for a long period of time, we have a good installed base in the core industry. We continue to service them as well.
So when you spoke about there are some new segments that have come by as well. In terms of your revenue split, how much would be coming from older sectors or the core sectors? How much is coming from the new sectors, and would that change in next 2-3 years?
So yeah, I did that analysis, and I must say that more than 50% is coming from new and the near new segments.
Oh, wow, 50%. And are they coming at higher margins as well? Because we've seen that in your 2023 performance, margins have jumped, and that seems to, make the street happy as well.
So as far as the margin is concerned, it's the, there are a number of factors involved. We did have a period wherein we had the supply chain disruption, we had the inflation period, and we also had change of perception that the customers want to buy from from the suppliers who are more reliable and have a higher quality product. So I would say we are rightly priced, and those products are appreciated by the customer at that price point. Yeah.
Okay, interesting. So would you say you have market leadership in a lot of the segments that you cater to? What is the market share there?
So as far as there are certain market segments wherein we could have 30% plus market share, and there are certain segment or products wherein it could be 10 to 12%, and that's where we see we have a lot of runway to grow as we expand our portfolio. We localize it. When you localize it, your cost also comes down. You then are able to participate in a much broader market. The market segments themselves are expanding, and also the Tier 2 or Tier 3 cities are expanding. So what we find is that all these effects then lead it to the performance that we talk about.
I was reading a report, correct me if I'm wrong, 60% of oil and gas produced in India is monitored by ABB, 65% of the cars manufactured in India are painted by ABB, and 90% of cement companies, they have ABB in operation. Is that correct?
That's correct.
Let's talk about how much time does it take for you to execute an order, and is execution different in different segments? Which is the segment where it is the longest?
You're absolutely right. So especially in the projects business, if it could be in an oil and gas or in a mining industry, or it could be a railways project, it can be as long as 1 year to 18 months. But in product segment, which is on the lower side, we have the MTO and MTS, made to order, made to stores. These are easy to configure products. There the execution cycle could be as low as 2 months.
You know, there's so many segments that you said you will be catering to. Data centers, I have to ask about that because so many people have shown so much interest here. What's the addressable market here and what's making you so bullish here in terms of order book? How much will it be going forward?
Data center, as an example, is a very reason everything in India is working is getting digitized. That has to be served by data centers, and it has e-commerce on it. It has public good transaction. Government is moving all their services. So, having seen what has happened in other countries, I think India is at the starting point of data center revolution. So, there's an expanding footprint of data centers across the country. And I think it has just started in the last few years. Given what we have seen in other countries, it has a long way to go, and it will only become larger. More power will be required, and also government wants Indian company as well as public data should be localized. So that has a good kind of a trend for it. So I think it's a plus billion-dollar business, and most of the large players, they like our technologies globally, and when they move in here, they continue to use ABB technology, and we are catering to them as well as domestic players. They are using it effectively. So if you look into data centers, it's array of computers which are power hungry, and we supply power to them.
Okay. So when you talk about technology, how often would you have to invest in a new technology or get a new technology for any segment for that matter? And does it become a big part of your R&D percentage in terms of expenses?
So being part of ABB Group, which is out there in the market for last 140 years. So we have deep-seated technologies already available, well proven in Europe or in other parts of the world. So whenever a particular market segment comes and is ready for prime time, as we'll say, technology is available. All what we have to do is to bring it here, test it in Indian conditions, adapt it, localize it, bring it to the right price point, and the volumes in an Indian market, they don't disappoint.
Oh, interesting. So ABB India per se wouldn't have high R&D costs, that would mean, or that continues to be
We are part of the global R&D network, and we take benefit of that.
Oh, okay. So what does that mean in terms of royalty? Is it in high single digits for you? How much is it in terms of payment to ABB Global?
I think it's within the norms that government and the governance structures require. It's below 4%.
Below 4%. And there are no talks of any increase there, because I would say, because with all MNCs, this is one question that all shareholders have, right? Will the royalty increase, because that goes away from their earnings?
As far as this company is concerned, it's a board-led company, Indian board-led company, and wherein all the governance models are well in place, and whatever we pay for technology, if we have to develop all the technology from scratch in India, it will cost much, much more. So what we are getting is access to proven technology, available, already being used in other parts of the world, and we are able to bring products very quick to the market. I think that's a big advantage for being part of a multinational network and paying a kind of a small fee for access to that technology.
No, makes sense. So you do have a substantial cash in your books as well, around 4,700 crore rupees. Will you look at tapping markets for inorganic opportunity, or do you think you're going to grow organically because there's so much already available in the market?
So as I said that globally, our cash books are good, also in India. And our global CEO has given, in part of our ABB Way model, empowerment to all our global divisions to look for small, medium-sized, and large opportunities and integrated part of the business if it creates a lot of value for the customer and also creates a lot of value for ABB and ABB shareholders. So that cash is available for inorganic opportunities. There's a good pipeline, and we keep on going through it. It can happen that ABB Group acquires something which has a large footprint in India, so it gets used there. In any case, we continue to use it for our organic expansion.
What happens to margins in this case? You've seen around 14% margins in 2023. Say not the next 2-3 years. What is the margin band you would look at? Would you go to high double digits coming ahead? And will it come in from newer projects?
So as a policy, we don't give future outlook and projections. But if you look into my past commentary and also my CFO's commentary, what we do is we continue to focus on operational performance and operational synergies. And once you work on it in a diligent way, every quarter after quarter, you continue to gain out of it. So one is you get the volume effect. Other is you get the operational efficiency effect, and also we have a lot of capacity available in terms of how we can quickly expand to cater to more market, because most of the plants that we have, we don't need to go for extra investment. We can just incrementally invest it.
So since you're talking about expansion, since you're talking about new demand, will that continue to make your working capital go higher as well? Is that something that we can expect?
So we continue to work with our suppliers. So as we stabilize the supply chain as well as our production processes, we make our suppliers participate in terms of outsourcing some of the work. So that eases out our net working capital. So there are certain businesses where our net working capital is negative.
Yeah.
So that's a well-rehearsed policy, but first we stabilize, we make it profitable, and then we go for the growth for our business as well as with our suppliers.
Okay. So I know you don't give forward-looking guidance, but in 2023, you've surpassed your guidance of revenues, and you are that 10,400 crore mark. So 10,000 crores is a milestone. What next in next 5 years? What's the plan? Will you be able to double it? Will you see revenues of around 15,000 crore rupees?
Well, I can give you a simple equation. Last year we crossed, previous to last year we crossed 10,000 crores in orders, and this year we have crossed 12,400 crores. So that means there's a 23% jump you see there. And then our backlog has expanded by 30%.
Yeah.
So if you take it forward and you take that same momentum, and Indian market is still looking quite good and is becoming more and more broad-based, more sophisticated, I believe we have every confidence to see that this journey continues.
Last question before we end this conversation. We are talking about a lot of demand, a lot of triggers going forward. What, according to you, would be a big risk or a risk in the growth that we are seeing?
I think at the moment the market and the policy of the government for a large country like this is set up in a good way. I think if everything domestic, it's less of a concern. But if you really look into the geopolitics kind of situation that is developing around the world, that's an area of risk, which is not controlled by us locally. How that will shape up, I think that's something which you can consider as a risk element. And how the, what you call the interest rates play out, but those are the things which one can watch out. But those are not the ones which you can influence. So I think the attitude we have with our leadership is we always focus on what we can control. And let's hope for the best. And if a situation develops, whether you have a very severe situation like COVID or some other disturbance, on that day, readjust and adapt and see what best you can do to continue to serve your customer, because that should remain the focus, that irrespective of what situation, there are a lot of customers out there who depend on us. We need to make sure we never drop that ball. So that's our mantra.
Very interesting. That should be the mantra in life as well, right? Focus on what you can control, other things will take place. Thank you so much for joining us today. It was such an insightful conversation, and hope to be speaking to you very soon again. And that's all about ABB India, but do stay tuned. We'll come back with more. For now, back to you in the studios.
All right, that was a deep dive into ABB India. But time to slip into a short break. We'll come back with another interesting stock. Indian metals and ferroalloys, that's the stock in our Spotlight segment. Don't go anywhere.